While the rest of the world was fixated on China's announcement about the extension of rare earth elements, they missed a far more important announcement that also came out of China, had nothing to do with rare earths, and had everything to do with the future of the US dollar. Let's get into it. Let me tell you a little story. In manufacturing, it's not the hammer that shapes the metal, it's the resistance beneath it. The hammer makes all the noise, but it's the anvil that gives form. Every strike looks like dominance. It looks like force, it looks like intention and momentum, but the real power is in the stillness, the density, and the endurance of the anvil. And as all metalsmiths know, the hammer cracks long before the anvil does. Now, recently, the entire world was captivated by China's announcement that they were extending restrictions on rare earth metals, the building blocks of modern technology. And the American president blustered in response, calling the move unprovoked and unprecedented and responding with an additional 100% tariff on Chinese goods. This announcement sent the markets and the media into an absolute tailspin. None of this was news, because China's control over the rare earth supply chain has been baked into the cake for over 20 years. When we all decided that we wanted advanced technology, we decided that we wanted smartphones and laptops, electric vehicles, and renewable power, and we wanted to design these technologies at home so that we could control the interface and the features and the applications, but we didn't want one specific part of the supply chain required to build that technology. And that was the dirty part, the invasive and toxic process of refining these obscure little metals that make our devices, batteries, and clean energy dreams possible. So when China raised their hand and said, we'll take that on, we will cede some environmental concessions and use our cheap labor so that you can have cheap iPhones, the entire world signed that contract. And we might not love that contract today, but it was sealed decades ago. And that is how China monopolized, to the tune of over 90%, the refinement of the world's most critical metals. That wasn't unfair play. It wasn't some covert activity. They volunteered and we accepted. In fact, we encouraged. And as a consequence, China, like it or not, to any policymaker, is absolutely indispensable to every major economy and every major technology company on the planet. But while everybody was fixated on that nothing burger headline, the world ignored a far more substantial story that happened at the same time. You see, when everybody was talking about rare earths, at the end of September, China made a very different announcement, one that had nothing to do with rare earth metals and everything to do with the US dollar. What they did is they informed BHP, one of the world's largest commodity supply companies, that they were suspending US dollar purchases of iron ore. Now, to be clear, they did not suspend iron ore purchases. They suspended buying iron ore in US dollars. So for context, China buys about 710 million tons of iron ore from BHP every single year. That's about $75 billion worth of product. So when China paused orders, BHP jumped to attention. And I understand that skeptics might say, come on, China was bluffing. Clearly, they can't afford to just stop buying iron ore. Their economy relies on it. And I understand the logic there. But in a country with political will like China, when the state dictates what corporations will do, they do it. And the government ordered Chinese importers to suspend all US dollar purchases of iron ore from BHP, and they did it. This, of course, brought BHP to the negotiating table. And as of 2 weeks ago, they agreed. Moving forward, BHP will accept renminbi for 30% of their iron ore sales to China. So quick context, why does this matter if you're not following the dollarization and de-dollarization trends? For nearly 80 years, the US dollar has been the world's default trading currency. Almost every major international deal, from oil and metals to food and machinery, clears in US dollars. And that means that every nation and company and bank needs to hold US dollars to do international business. And this global dependence gives the United States enormous leverage because it can print the currency that everybody else must earn, and it can weaponize access to it through sanctions and financial restrictions. So when a major player like China starts convincing its trading partners to use renminbi instead of dollars, it chips away at the foundation of that power. Every non-US dollar trade deal is one small crack in the dollar's global monopoly. So let's get back to the story. BHP's move to accept renminbi is a bigger announcement than people realize for three reasons. And reason number one, it's not a standalone event. This is precedent. It's new precedent. You see, China's already been conducting trade outside of the US dollar system with smaller economies or BRICS nations, but this isn't Vietnam or Indonesia, and it's not a BRICS peer like Brazil or India. BHP is Australian. So China has just established that a Western-aligned G7 adjacent country will transact in renminbi if required. And this becomes a template that China can now take to the rest of the world, any country, any corporation, and say, this is how we do business now. We do business in renminbi when we want to. It's good enough for BHP, so it's good enough for you. Reason number two, why people are sleeping on this announcement. This isn't a one-way transaction. It's a two-way flow. You see, the money doesn't stop with the sale. BHP will now be accumulating a treasury of renminbi, and they'll be tasked with the question, what do we do with it? Now, they could, of course, just convert that renminbi to US dollars and move forward with the rest of their business. But as any non-American business owner knows, managing currency risk is an absolute headache. Exchange rates vary and converting currency can be expensive. In the case of BHP, dealing with tens of billions of dollars in value, this option is highly suboptimal. So alternatively, they can find other suppliers who are willing to accept renminbi as payment, that they could use their renminbi as a trading currency, which means one of the world's largest multinational mining and commodity trading companies is now incentivized to find other players who will join the de-dollarization movement. And that's a big shift. The most obvious supplier, of course, is China itself. And this deal encourages BHP to invest further in supplies, services, and investments in the Chinese market, because that's a natural home for renminbi, just like US dollars in the US Treasury market. Now, the third reason this deal is significant is because the rest of the world wanted it to happen. Now, what do I mean by that? Iron ore is the core ingredient in steel. So China imports so much of it because it supplies the world with 53% of the world's steel. China sells steel to virtually every major economy in the world, over 150 import destinations, covering more than 3/4 of global GDP. So when China halted US dollar purchases of iron ore and began negotiating the renminbi deal, the majority of the global economies, they just shrugged and said, we don't care, just get it done. For the rest of the world, every other economy, it doesn't matter what BHP holds in their treasury or what American policymakers think about non-US dollar trade or how China pays for its imports. All that matters is whether Chinese steel continues to arrive in their country. As long as that answer is yes, nothing else matters, because every country's first priority is its own people, its own prosperity, and its own survival. Now, let's get back to the relationship between the hammer and the anvil and kind of close the loop here. Let's look at a couple pieces of history. When the United States demanded that global sanctions on Russian energy prevented that Russian energy from flowing to America, Canada, Europe, the energy didn't disappear, right? It just changed direction. Russian oil now flows east. China became Moscow's largest buyer, and together with India, they replaced nearly all of Russia's lost Western market share. When the United States exiled Iran from the global economy, a nation sitting on one of the largest oil and gas reserves on Earth, Beijing stepped in again, and Iran is now exporting record volumes of crude oil to China, often settled outside the dollar system. And even U.S. allies have begun hedging. Saudi Arabia has sold oil to China in renminbi. France completed its first renminbi-settled LNG trade earlier this year. And more than a dozen nations, from Indonesia to Brazil, have signed agreements to deepen renminbi-based trade with Beijing. Now, this is how the anvil forms the world. The hammer swung with sanctions, and the rest of the world just formed around the economy that was still buying. So as the United States continues to swing through trade demands, export controls, import restrictions, and sanctions, the rest of the world is quietly adjusting. The supply chains, the energy flows, the capital flows are bending around the anvil. The harder the hammer swings, the more the world forms to its shape. And don't forget, it's the hammer that cracks long before the anvil. I hope you enjoyed this piece. I break down events like this every single week here on my YouTube channel, The Jay Martin Show, in addition to interviews with some of the world's first-class geopolitical and macro finance thinkers. We dissect the greatest minds in geopolitics and finance so that we can better understand the world. And I break down headlines just like this every single week. If you enjoy my content, throw me a like, hit subscribe, share this video with a friend. That's the best way we can get this message to more people. I appreciate you, and I will see you next week.